Good morning, good morning. Welcome to Tuesday's mornings live stream. Welcome to Tuesday morning live stream. This is an ad-free live stream. If you're here for the first time, my name is Tyler. Welcome. I'm so glad that you're here this morning. And I'm going to be here to help navigate you through the wild world of day trading futures. During the live streams, I'm going to break down my live price action. I'm going to be sharing my daily trading bias, real-time trades, and give you a front row seat to all the action. If you're joining after the actual stream, feel free to jump to the key moments with the markers below. You'll find all the trades that I've taken with a detailed explanation so you can see exactly what I was thinking and why I was thinking that. And then lastly, for those of you looking to take that next step with your own trading journey and want to use Prop Firm Cash, I have a special discount code for you. You can use the code DTJ and get 80% off your eval account with Apex. All the links are in the description. Codes are in the description. Lastly, if you would like to join the waitlist to the Purpose Driven Trader Academy in Discord, you can find that link also down in the description. So let's go ahead and open in prayer and then we'll rock and roll. Father, we honor you this morning. Father, we thank you that you've given us the ability to produce wealth. I thank you've given us the honor to be able to do trading like this. Father, I pray that we are patient. Father, that we're not greedy. Father, we don't lust for more. Father, but we receive what you have for us in the market. Father, we renounce any selfish ambition. And Father, just give us eyes to see on what the market's doing today. In Jesus' name, amen. All right. Let's rock and roll. All right, so we have news jolts at 10 o'clock. So more than likely, we're not going to be taking a trade before then, but I'm going to be doing off screen. I'm kind of excited. I think I had a moment where I came up with a trading model for absolute brand spanking new beginner traders. Literally, it's a click, and you can make some money. But I have to test it out, so I can't talk. I'm teasing you a little bit. I did some back testing on it. There was, in some scenarios, it was a 90% win rate. In other scenarios, it's about a 70% win rate when you're going for a bigger take profit. And either way, I think there's meat on this bone, and I'm going to explore it a little bit. So, yeah, but let's start with a higher time frame analysis. Let's see what we have potentially going on today. I've cleaned up my chart a little bit. Let's see what we're looking at here. All right, just based on how we closed, we had an inside day. So when we have an inside day or a fake break day, which meaning it didn't break the high or the low from the previous day, it was an inside day. I'll tell you what, I expected that after I quit trading yesterday. I'm like, I bet you this is going to be a crappy day. Meaning it's not gonna run a high or lower, and that's exactly what it did. Now, what this means is there's a high probability, there's a 50% chance that both the high and the low are going to be ran. 50%. If not, that means we are going to play down to the sell on the sell side of the chart. We may see lower prices, and based on how this closed, it wouldn't surprise me if we get an expansion type move lower, running the liquidity on these here, considering we just grabbed this liquidity in this fair value gap up here. It wouldn't surprise me if we move lower. So I'd say on a higher time frame, I am bearish today, looking for lower prices. I think that's what I want. I'm okay. I'm okay if it doesn't want to run up here. I don't need it to run up here. Quite frankly, I would probably prefer it not to do that. We'll see where it opens here this morning. We'll drop down to the 15-minute time frame here. I have the opening range gap ready to drop, but we obviously haven't done anything with it yet. So the other thing I want to note is that if we open inside the previous day range, inside it, so we open above this previous day low, there's an 80% chance that we run it in the AM session. So we could get a quick move lower. It just depends on where we close here, so we'll see. 80% in the AM session. AM session stops at 11:38, by the way. Good morning, Sandra, Jay, Carmen. Glad to have you guys this morning. How are you guys doing? If you haven't said hi, say hi in the chat. Glad to have you guys this morning. Villainous, Richard, good morning. Cubic, Greg, how you guys doing? Greg, what kind of car is that? Is it your car? Is it a dream car? I can't tell. It's too small on my screen. I like people that have a thumbnail of some kind for their picture. 1994 RX-7 LS7 swap. Nice. I'm not a huge car guy. I always wanted a Corvette. 67. And then I got myself a Tesla. I enjoy the Tesla quite a bit. All is going well. I'll be honest with you. I'm a little nervous on trading today. I had 2 losses yesterday, and in the back of my mind I keep thinking to myself, "Oh, you had 2 losses. What are people thinking?" So to mitigate that risk, I'm reducing my size. You have to. You can't trade with those feelings, and it's so easy. I've done this so many times because those thoughts, they always try to pop up. They're always lying to you. You just have to dismiss them. But one practical way that you can mitigate for those thoughts, so if you're sitting in front of your screen and you're like, man, you're remembering how you lost. You're remembering how you don't want to take another loss. If all those feelings are coming up, you have to reduce your size because you want to be able to eliminate those feelings while you're in the process of making those trades, when you're making those decisions. And there's a good chance that you'll have a winning trade when you reduce your size, which tells you just starts rebuilding that confidence. I know I can trade. It's one of those ways to easily mitigate those lies that try to manipulate you and try to get you to make more losses. Because the truth is, I know how to trade. I've done it. I've seen it. You've seen it probably. My wife has a Rapid Blue C8. You know what? I wish I could say, Greg, I know exactly what that is. I have no idea. I wish I did. I think cars are great. I just never put the time into looking at all of them. T-Man, good morning. Alkai, glad to have you this morning, man. How you doing? Is that what it is? Okay, Jay. See, I don't even know the Corvette. Oh, at least you looked it up. Okay. Okay, so the reason why we're kind of just sitting here a little bit is we got jolts at 10 a.m. So we won't be taking a trade. I will be doing a test trade off screen, because I'm working on a new model that I want to, a brand spanking trader new model. So that's what I'm going to be working on here. But it's an opening trade. It's right at the open. But I can't be like, talking about it before I've tested it. I just can't do that. I have to do the due diligence. I have to test it. I've already done the back testing. Back testing has it between a 70 and 90% win rate. Jay, so right now on this channel, I have two primary models that I trade. It's the inversion model and the breaker model. There's other order flow entry strategies that I've talked about and used, but those are primarily the two models that I use. I'm trying to come up with, here's the thing about trading. Most people that get into trading, and raise your hand if you agree with this, get into trading thinking, I'm going to start making money really fast. And I would say 95% of them give up when they realize they can't. And then those that decide to stick it out realize it's much, much longer than they ever anticipated. We're talking years. It can be a year, 2 years, 3 years. I'll be going on 2 years in April. April of the next year will be 2 years. So I've been thinking of how can I create a quick win, an easy win for brand new traders to give them a high probability trade with almost zero knowledge of the market. And I think I figured it out. I just have to test it a little bit. I just need to test it, and we'll see if indeed it's going to turn out to be something. I'm kind of excited about it, but we'll see. But I don't know if that answered your question. If you understand what I mean by a model is a set of rules to get in a trade, a set of rules to get out of a trade, and a set of rules to know when you need to, when you've hit your stop loss. All right, 1 minute till open. Looks like we're going to have a premium gap here. Let's see if it wants to. Yeah, that's what I mean by a model. I know we were just talking about like car models. Models of cars. That could get confusing. All right, so let's see here. We'll go 2 contracts. All right, hit the midpoint. And we had a nice explosion there. Let's see how big this gap was. All right, no close below this right here. The opening range gap is only 10 handles, so it's kind of small, meaning we're sitting and waiting. It's going to be, I would say, a small opening range gap is a sign of a little bit of volatility, choppy, big wicks type situation. We want to wait till opening 10 o'clock anyway, till the news. So there's the run on the previous day low right there. We're going to keep that there. I wasn't able to do the trade that I wanted to do. The size of the opening range gap was too small. Good morning, Hang Flying. How you doing? Some nice volatility here. It would have been nice if this candle closed below this fair value gap, but it didn't. Didn't give us an entry. For those of you looking and thinking like, wow, look how nice that is. There's no entry. We didn't have an entry, at least in my inversion model, and then we really didn't have a breaker that I could play off of. And it's before news anyway. All right, let's look at see what we got for lower targets if we want to expand lower. We got our new day opening gaps here. New week opening gap of the 14th that hasn't been tagged. That's been tagged a few times. We have London low. We have a previous day low. These are the obvious levels in my book. We just want to make sure have them on the charts. Okay, so as I said, I expected on the daily time frame that we were probably not going to run this previous day high. We already did in the pre-market, but we closed inside the range, ran that low, and unless we get a quick Judas swing here to start running for the previous day high, I see us moving lower. That's honestly what I would think we would be doing. All right, there's tag of midnight open. Let's see if it wants to find support here. Hey guys, let's hit, we got 36, we need it, let's hit 17 likes, 17 to 20 likes, and then I'll take that first trade on screen. First trade on screen, we gotta hit that number. Nice rejection there. What does the 30-second look like?
Order submitted.
I think I'm gonna do a little small trade right here. See if it gives us anything.
Order submitted.
Did this inversion right here. Just wanted to see if it'd react. We had a nice reaction off of midnight, and that was a no. I wasn't going to hold it that long. I just wanted to see if it was going to have a nice reaction there or not. Oh, you guys, I'm sorry. My micro screen is not working. I'm sorry. That sucks. All right, I'll have to mark it out, tell you guys what I'm doing on here. There's an issue with OBS sharing that. Joel's report 10 a.m. Yes, sir. We're waiting for that. I just wanted to see what was going to happen with it. It was a nice reaction. We've had a nice sell-off here. Nice reaction to the midnight open. Joseph, a single fair value gap. Single fair value gaps are a big part of that. So if you're looking at this down, all this series of down close candles, I have a video that explains all of it. I'll also be doing, the entire course is going to be revolving around that in the breaker model. But if you have these three right here, you have a fair value gap, 1, 2, 3. You cannot go long on this fair value gap. You can't go long on this fair value gap. It would be this one. The reason for it, so that's why it's always better to have a single fair value gap. So in this case, it would be the 3-minute chart. The 3-minute chart gives you a single fair value gap that allows you to watch to break for the single high right above it. Does that answer your question, Joseph? Hopefully it does. We got 20 minutes till 10 o'clock. Look at the wicks. So that price action changed really quickly from this point right here on. Look at the difference from 936. 936. Indecisive bodies, large wicks. I took a small short with the idea that we were gonna come up against the midnight open. We rejected it and we inversed a 30-second fair value gap, and I was wanting to see if it wanted to go lower. And what we did was this, so ended that trade. And key thing is reduction in size. It's very small size. Oh, there's a bunch of different things, but as we trade, I kind of talk through them, Joseph, when it's important, because it's much easier to teach based on showing something on the chart and an example of how price is moving than it is just pull them out of thin air and just say them. So we'll talk about them as we go through it. All right, so it's interesting from this reaction here. If we start being aggressive in this direction, we could run for this previous day high. I'm not saying that's only it's a 50% chance that we do that. Either I think we're going to play up in this area at some point during the day. I do like the idea of lower prices, though, overall. Oh, me too. Listen to it all the time. So you can look at this 3 minute right here and you can say, oh, that's an opportunity for a long, which is not bad. You type the new week opening gap. I mean, that does look nice. The thing we have to be careful about is jolts. We also have previous day PM high sitting here. I'm not a fan of always taking the 3 minute. I usually prefer the 1 or 2 minute. Also, I'm willing to, I do the 30-second a lot as well. So we have a 30-second right here, and it's going to close. That closes. That would probably be an opportunity for a long because of the volatility here. Let's see if it wants to give it to us. This is the entry I have. My micro screen is not working very well, guys. I apologize. It was funky. So we're basically trading this momentum here towards these highs. The 30-second close. Let's look at the 1 minute. Did the 1 minute close as well? The 1 minute did close. So I I don't mind this trade at all. But you just got to understand we're before news. I'm reduced size because we're before news right now. And we are looking to see if it's going to close here. And if it closes, which there's the close, and that's a closed trade. It's a break even, or not a break even, but that's a... See how we closed right here? That was the close. Very subjective. You could potentially hang on to that. But you need to understand that that's mechanically, that would be the close of this 30-second trade right here.
Order submitted.
So now that you've seen this not play out, here's the thing. When we don't see things play out, especially when momentum like this is not a bad trade. Especially even on the 1 minute, we get a nice close and it retraces. This just tells you we have to wait for jolts. Jolts is, or 10 o'clock. 10 o'clock, there's news at 10, and that just messes up with how price moves. And so that's why we just want to wait. Good morning, Deborah. How are you doing? All right, let me see if I can figure out while we're waiting here why my micro screen's not working. Okay, I got it working. There we go. Okay, we're all set up. I am doing good. I am... All right. Hey, sorry. I want to see how we react to this. This wick counts as part of a breaker. You know what, I can't believe I missed this, guys. On the daily chart, we have a daily fair value gap. How did I miss that? I have no clue how I missed that, folks. Well, it does. I mean, it didn't change anything for us because we're waiting till jolts at 10 o'clock. Nine minutes. Since I'm looking at this, we have the fair value gap right here, and then if we want to reach further, we have this volume imbalance sitting right here on the daily. Volume imbalance on the daily, and then the previous day low sitting down there. So that could be a point of interest if price wants to actually move that direction. Yeah, if I'm looking for a move this morning, I would like something like this. Reaching up into London highs, the previous day high, and then moving back this direction. I would like that. Don't be deceived, guys. These are large candles, by the way. This right here is every 5 point. This is 5 points right here. So this candle right here, that's 17 handles. That's 17 handles right there. So these are large candles. Even when I'm looking, so like, look how small that looks. That's 17 handles. But I'm just trying to get the whole context, and that's a 30-second candle. Here's our first fair value gap overlapping with the previous day low. We got 5 minutes till jolts, guys. See what we got with ES. All this is low resistance liquidity. We ran some of it right at 930, but I do like London high, and I like the PM high from yesterday. So we didn't get down to this opening price. We did hit the high of this breaker. Low, high, lower, low. And I'm looking at the bodies. They're pretty close, but still the same concept. See how we swept this high but didn't continue? It's kind of what happened here with this inversion on the 1 minute. This is why we wait for news. We filled this daily fair value gap. Honestly, if we don't want to go lower, the daily fair value gap is enough for higher prices. So this right here, filling this daily fair value gap, can give us permission to push higher right here. All right, 50 seconds here. We got a 5 minute here. That's going to be irrelevant for us. What do we got? Anything here? We have a fair value gap here. That would take us to these minor buy side. All right, here's jolts. Let's see what happens here. Didn't run any of these, but we did sweep this high and filled the last remaining fair value gap before these swing highs. Let's see how it closes in 20 seconds. Are we green or are we black? We are black. Got a 3 minute there. Let's see what we got here. We did get a 5-minute change in state of delivery on the close of that 9:55 candle right here. What about the 15-minute? We also got a 15-minute close as well. So, in other words, higher prices. This wick sucks because it took out this fair value gap. We can still play the close of this fair value gap, but it basically took out all the liquidity except for all this up here. And it allows it sometimes to run aggressively because it's already filled these imbalances, so it can just run to these highs and then grab the liquidity. Let's see what happens. But based on the 5 and 15 minute, it looks as if we could see higher prices. How we get there, that's what we got to figure out. How it's going to play out. What's the narrative? This is also a 5-minute. This is not only a 1-minute fair value gap right here, but it's also almost a 5-minute. 5 minutes right there. So this is the 5-minute. The open, the high, and the low of the 5 minutes right there. We're already, see where this line, red line is? We're already in premium. If we are targeting these previous day PM highs, if we use that as our target, we're already in premium. If we use our, if we're running for the previous day high, potentially we could still be in discount. So here's our consolidation. Here's our manipulation. We hit our midnight open. We ran through midnight open. Where's our 9? Did I mark 9:30 on here? Here's our 9:30 price right here. So all this could have been manipulation to move higher. I'm just not sure. I'm not sure if we want to run all the way up here. If we're just running the London highs, this is already in premium and doesn't make it an attractive trade. But because we're bouncing off a higher time frame daily fair value gap, this is a possibility. These are all the things that are going through my head. So I'm looking at this as a potential trade, but we want to move our stop to break even fairly quickly if we're going to close above that. I'm willing to take it. I'm not liking the way price action looks. Even after, it's very similar to what it was looking like before 10 a.m. So I wouldn't give this an A+ setup. This is probably a B+, B. I like it because we have our stop to break even is really close. And then I can move my stop to break even fairly quickly if it hits. Stop will be moved to break even as soon as we hit those highs. I'm watching my other chart to determine when I'm out of this trade, by the way, because I don't have time to grab it. All right. That was easy. I was on the wrong side of that. Watch 930. Let's see how it reacts to 930 right here. But, I mean, look at the wicks and all the price action. I don't like it. Something's going to have to happen dramatically for me to want to do another trade. You know, I'll wait. That's what I mean by that. We have a 15-minute. The 15-minute, the 5 minutes, all supporting higher prices. $9.30 also is considered a breaker. We have low, high, lower, low. I'm not trading off that because of the way it looks. We got a doji candle on the weekly print last week. It's going to be consolidating. There is the weekly. Yeah, even though it's on the weekly candle, I mean, we have really high highs. I mean, that's 20,700 and the low is, this is a 700 point candle on the weekly. So there's plenty of range within it. Are we going to go outside this range? I don't know, but I know that I can get 20, 30 handles within 700 handles. So but do you guys see how this is trading? I even called it before I took that trade. I should have not taken the trade because I was talking about it, but I wanted to take the trade. And that is one of the things I have to journal about. When I'm identifying poor market conditions, why should I take a trade? I shouldn't. The market conditions I didn't like what I was seeing, yet I had an inversion. I had relatively close fair value gap or swing highs that I felt there was low risk. I'll call that poor decision on my part. I like how we came back down, swept these lows. This is looking nice for a little bit of a move. No fair value gaps in this, just low resistance liquidity with nothing there. So no opportunity for me. I'm trying to figure out when low resistance hits and erases the high resistance. I'm not exactly sure what you're asking, Sandra. Maybe you can help me understand. Buy side tagged, rejected, previous day high, and London high. This is what I'm watching. After we hit these levels, I want to see how we react. I'm trying to figure out when low resistance hits and erases the high resistance. Are you saying you're trying to figure out when does high resistance trading end and low resistance begins? I did listen to a portion of that video, and my takeaway is this, is that you have high resistance on days with no news. You have high resistance when we're in consolidation, and your best time for opportunities is knowing the draw on liquidity and taking those. Also, when there's a lack of fair value gaps. So you can see this right here. There's a lack of fair value gaps in all of this price action. Basically above here, and this was one of the reasons why I took this, is there's not a fair value gap here. Now, how do you know when it ends? The only way I know right now, and I'm a year and a half in on ICT content, is macro times and displacement. Macro times and displacement. So when we were in a macro time, we were in the 10 a.m. macro time when I took this trade. We were at 10:05. It's not a horrible setup. It's not at all. The other thing is macro times and what did I say? I'm drawing a blank on just what I said. And displacement. The only thing that we didn't have was the displacement. This Jolts candle was basically nothing, and we were playing inside this wick. And I thought once we close above this fair value gap, we could get above this high. Well, we didn't. So we took a loss. We did eventually get there, but outside of the rules of my model. And the only other thing that I didn't like was that we were in premium if we were to target London high. So I don't know if there's an easy answer to that, Sandra, how to determine when you're out of. I just know when you see lots of low resistance liquidity like this is really nice. There's one fair value gap right down here. And we bounced off of that towards this high. All this will be low resistance liquidity at some point. So we can use this as a potential, it's not a reason to go short. You have to have your bias correct. And for me, I was saying that the 5-minute and 15-minute closed. So my bias, I changed my bias to bullish, that we could see higher prices. We've been seeing that. It just decided not to run in a low resistance type of way. It's more high resistance. Up, down, up, down, up, down. I don't want to do any of that. And so I think the safest answer, and the answer I need to convince myself on, because honestly, I shouldn't have taken this trade. I mean, I'm being very vulnerable with you guys. You guys are seeing this right in front of me, and I'm hoping that this is helpful to other people. But low resist, the only way you know that low resistance liquidity is taking place, or that it's going to be easy trading, is you see it with your eyes. You see it with your eyes. Okay, I saw this right here. Disregard we had news. I saw this down movement here, and we came up and we hit midnight open, and we rejected it nicely. I did a small short on this. Now, this right up to this point, in my mind, looked very nice. Told me that, hey, we actually may be running today. We could have a nice move today. Not necessarily at this exact moment, but this was telling me, hey, potentially not a high resistance day. And I wanted to see if I could capitalize on a little bit lower move if it was going to do that. Disregarding jolts, the reason I took a very, very small position is because I knew jolts was at 10 o'clock. Well, immediately after this, what do we get? We get up and down wiki price action, and then I see this period of price action right here, thinking, well, this is nice as well. Again, what do we have hindering us? Jolts at 10. We close above the fair value gap. I'm like, this is nice. There's no other reason for this to stop, but it doesn't go. What's the reason? News. Now that we're outside of news candle right here. News candle sitting right here. This big wiki black candle right here, news. What have you seen after that? There has been absolutely nothing good. So I took this trade with the expectation that we were going to go higher. I mean, could I have waited? Yes. I said I'm not liking the way price is looking, yet I still took the trade. That is what I have to get better at. Is I'll say something that I don't like, but then I'll still take the trade because it's a setup. It meets my criteria, even though I'm not liking the conditions. And I know when I look back at all my trades, when I look back at my losses, 90% of them, I'm giving a number because I haven't actually added them up, but a high percentage of my losses are in this environment. Yet I've still taken those trades, and this is me being vulnerable. Again, this is probably my weakest area, is taking trades in poor environments when I see my model. I see my model. I see my entry. I know my model works. I've seen it. I've made 50, 60, 70 handles on the model before, right? I've seen that done. But when I recognize a poor environment after news, I'm literally talking to myself right now. Why am I taking a trade in an environment where it's like, wow, look at this up and down. It's not running. Look how it closed. Yes, this candle, this fair value gap here is the last one. I could move my stop here. I thought this was a low risk opportunity to move my stop. It ran against me right away. I shouldn't have taken that trade. I should have said, let's wait till we see price action that is more attractive, that tells us it wants to start running in a low resistance manner. Now, the thing about this, though, you have to be careful with is thinking that it's now low resistance and jumping in too quickly, not being patient enough. You are assuming, oh, we got 3 candles in a row. This must be low resistance now. And then you're trying to get in long and run this. That's a mistake I've made in the past. Give me a second. So really, you need to see lack of low resistance trading and displacement at the same time. We don't have any of that. So newbie move on my part for not doing that. Or newbie move on my part for taking that trade. I shouldn't have taken this trade. Honestly, I shouldn't have taken this short just to find out. Because it was before jolts. I shouldn't have taken this trade here because it was before jolts. Honestly, this is me. It actually feels good talking about it. I kind of want to slap myself in the face. Like, come on. You know how to trade. Those are the newbie moves you've made so many times in the past. What are you doing? And if we see a move like this and it runs our levels out of this crap, great. We're not going to take it. No, we can't take it. We can't participate in that. I'm talking to myself. There's our previous PM high. We just hit our London high. The next opportunities that we have is this fair value gap. This is a 1 minute fair value gap that has not been broken from yesterday's price action. We got 930 opening price sitting right here that hasn't been touched. And then after that, we have a swing high and previous day high sitting up there. So these are the last thing. These are the only other points of interest that I like. Seeing if we get resistance here, if we run this, and if we tag that. But to be honest, this PM tag right here and London high tag, if we get displacement lower, can be enough for us to consider lower prices. Now, I don't know if we're going to get that considering we're redelivering off of a daily fair value gap. And we might run for this previous day high. So what would I want to see? So I'm going to get some of this chop out of here. But if I'm looking at price action at this moment, I'm looking at London high, roughly London high to be support. If we can get London high to come, or price to come back down to London high and find support and move higher, that would be an entry opportunity. Why? We have a breaker on a higher time frame. We have our low high, lower low down here, and we've now broken through this series of up close candles. But see how now it's running? We were on the right side. This was on the right side. It didn't work out. We look at this crap. I get annoyed. Now, one thing I have gotten better at is I don't chase moves like this anymore. I won't chase this. I'll wait for the retracement. But now that we're getting price action like this, all right, it's ringing in my ears saying, all right, we might have an opportunity. We just got to wait for a model now at this point, whether it's a breaker or an inversion. Sounds good. I'll go short. Let me know when you go long. I'll go short. It's about timing. All right, so look at this list. I like this a lot. I really like this. I would love this to get all the way down here. Okay? I'm viewing this as total manipulation. 100%. Now, could it just keep going? Yes. This is why we're not taking it on this move lower. Okay? But I'm viewing this as manipulation. There's our London tag. Let's see how it holds around here. Okay? We do have this low resistance liquidity right here. I'm just... Either way, we don't have... There's not an entry for us here. So... Great displacement. I'm not looking for shorts yet. I would need to see a close of this candle right here. For me to start looking for shorts, I would need to see this candle become an order block. This candle is the one that ran all of these key levels here. I would want to see this level be closed below. We'll see if it actually gets that. It's also 10:30 right now. We're in between macros. I've seen trades happen outside of the macro times 100%. I told you I still think this is manipulation. But I mean, I could be wrong. My bias at this point, based on how we're trading this and how we went down to here first. I don't know why we'd want to stop here. A pullback down to the new day opening gap and the tag of 930. I'm not opposed to that. I think that's a little much. It's asking for a little much because London high. Here's London high. So low, here's our low high, which is also London high, our lower low, and then we see this type of movement. So the 15-minute closed interesting. The 5-minute did not give us a close below this. So as of right now, everything's still telling me bullish. Could we get a retracement here? I think so. But nothing that I'm taking. I don't have an entry right now. Yeah. I'm not going short when we tag this daily fair value gap down here. I can't do that. And we consolidated down here for a while. Yeah. I can't do that. I'm bullish. Here is a 2-minute inversion right here in 1 minute and 26 seconds that you could take towards this high. I think that's a little higher risk than waiting for where there isn't really a good 1 minute. That's why I'm looking at that. This is just a very large candle, so I mean, I won't take that. And it's already up there quite a ways. It's 11 handles. That's not bad. I see reason. I think my losses caused me to have a little indecision. So I need for me and for anybody listening, you just got to take what is obvious. The model that's obvious. Nothing is absolutely obvious right now. All right, so I think that's the 2-minute close. 2-minute did close above. Let's see what happens here. Folks, I will be right back. I'm going to use the restroom. So far this 2-minute is working out. You have a 1-minute right here. It's just not as obvious. The 30-second looks better. I just don't like how high it is. So again, I told you, I said I felt this was manipulation. So far, it's proving out to be that way. This is the most obvious based on finding support down here against London High. But this is just so high in premium that it's not a trade that you'd want to take. Honestly, you would want to be looking for shorts up here. Or, where's this? That looks really nice. Look where London high is compared to the low of the day to our target. Previous day high. Assuming we target previous day high as our target, look where London high is. Taking a trade below London high would be really nice to run towards these levels. It doesn't have to get there. ICT talks about that all the time. Take the 10, 20, 30 handles and get out. That's all we need. That's all we need. 10 handles is the baseline. Is the base hit that we look to get. Let's wait for the macro, which is in about 7-8 minutes, and see if we can get an opportunity there. All right, let me ask you that while we're waiting here, guys. I got 40 of you on here. I would love your feedback on this. Just in your own, I want you to answer this question. And if you're brave enough, I would love for you to post it in the comments. In your own trading journey, what has been the biggest, the most difficult hurdle for you to overcome? What is the biggest hurdle for you to overcome? What has been the hardest thing for you, besides obviously becoming profitable? Profitable is the goal, but there's all these sub reasons that have been preventing or seem to be a roadblock for you in your trading. I'm just curious on what are those items on your part that, I would love to find success in this area. I've struggled in this area. I've even shared with you some of my struggles here today. It's trading in an environment that I've learned to be able to identify, and yet I still take my model in that environment and I win 50% of the time, right? What are those things? I'm curious. Chase trades, adding into a losing trade, getting out so you hold the losing trade longer than you should, over trading, knowing accepting losses are part of what we do. That's a tough one. I feel that. Impatience. Is my identity tied to being green? Totally get that one. Self-control. Self-control in what way, Jordy? Is it self-control in, is it over trading? Is it the revenge trading? Is it the adding to losses? Because self-control could answer all of these, right? Okay, look at this displacement lower right here. Okay, I like that trade. I'm going long right there. Let's see if this works out. Look at the manipulation we had. Right, lower, and then immediately we closed above it. So I got in long. I'm willing to take that. Let's see if it actually wants to give it to us. Break even is when we hit this high right here. Sorry, that happened so quickly that I just had to jump in. It just screamed my name. All right, stops at break even now. and I'm stopped out at break even. Now, do you see how that rule just saved me? That has to be your break even point because it's not uncommon for it to hit this level and then reject. So Tony, would you consider me moving my stop loss to break even too early in this trade? Because there's a good probability this is going to run higher right now. For me, the answer is no. I wish the stop loss wasn't, I didn't have to move my stop loss there. But watch, this will work out most likely based on this manipulation right there. That little piece of price action, these three candles, which were immediately after this consolidation, tells me it's going to run up here. Bets, yeah, bets on it does bet on an immediate move. And very often it works out quite well. It just doesn't work out on seek and destroy type conditions. So I moved my stop to break even. Let's see if my break even saves me. I really liked this portion, and it's exactly why I got in long. But at this point, when it runs this high twice and doesn't even close above it, that's not a good sign for order flow. Here's another inversion now the other direction. We have found support in that inversion fair value gap twice now. But we found support in this and finding resistance in this. This is the 30-second chart, by the way. It's not there on the 1 minute. When you get these immediate moves down and then you get a big move the opposite direction, when you see something like that, drop down to a lower time frame and it will show you your entry, which is a nice entry right there. All right, so here's what I'm looking at. I'm liking order flow so far. It has been respecting. It did run these levels. I'm liking this order block potential order block right here. If we get a close above this fair value gap, which also is a close above this order block, I think that is not a bad entry to target this high right here. Jordy, I understand what you're saying. I just didn't know if there was a specific thing for you personally. Bastian? For me, it's the inability to stop trading when in drawdown. Woo! I feel you. Another nice move here. A close above would also be nice. We're now watching order flow. It did not close above. Nice rejection there. That was not a close. This did not close below either. That closed on the level. Josh, your model B. Oh, yeah, you said that. I said moving to stuff. Tony, moving stop too early. I understand that. My encouragement would be to find the appropriate time. I'm actually doing a video on this right now. I'll be posting a video hopefully this week sometime on moving stop to break even. The strategy is under figuring out when is the appropriate time to move your stop to break even. And if you can identify that, that'll be extremely helpful. Because sometimes most people, it goes long and it's, up 3 or 4 ticks and then they move their stop to break even because they're moving their stop for the wrong reason. They're moving it because they don't want to lose money. I don't move rarely. I have in the past, but rarely will I move my stop to break even because I don't want to lose money. I move my stop to break even because it's part of my model. And I have a specific time when I will do that. In this case, it was on this wick right here at 1042. When it wicked above it, I moved my stop to break even, and look at the price action following. To me, my break even trade was a winner. It was a winning strategy that saved me from losses. But the reason why I moved it was not because I didn't want to lose money. It was because it was part of my model. So identifying when and where you can move your stop to break even to be appropriate. There's a close below for the first time. Let's see what happens here. This is not a trade. This is reading order flow. That is the goal, is identifying when you can do that. We are in the macro time. Consolidation. Okay, we get a close. This inversion fair value gap has a break even here. This is just, it doesn't work. It doesn't work. So you can't do that. I'm seeing the evidence of wanting it to move higher here, but you can't take trades off of assumptions. Is that the mistake people make? Taking trades off of assumptions. Volume imbalance right here. Let's see if it wants to wick and fill this volume imbalance. It did not reach into here yet. And you wouldn't want to take this trade anyway right here. This inversion right here. Because this is the fair value gap holding everything down. Do you see how this engulfs everything here? This is the fair value gap. When this is broken, it's a higher probability that you run for that liquidity. So just to make things simple. Actually, I really like looking at it. It just, I like it there. Don't take it. If you guys are here for the first time, I tried to say this at least once. Actually, here we go. Let's see what happens here. In the link in the description below this video, I have a wait list for the Purpose-Driven Trading Academy in Discord. If you would like to be a part of that community, if you would like to get access to that course as well, which talks about order flow, when to not take trades, when to take trades, and then it's your job to implement them, just like it's my job to implement the own lessons that I teach. But that link is down in the description if you are interested. We're going to be launching that here next month. We're getting real close. I'm really excited about it. Looking to have an awesome community of traders. All right, so let's see us close above here. If we get that close and if it wants to run. We are in the macro time.
Order submitted.
So I'm taking that. This will be my last trade. This is my order block that I'm framing this off of as well. If we can get back above this fair value gap, I don't like how this closed. Again, I reduced my size because of the environment, as you can see, that we've been in. It's just not been a very good environment of trading. Midpoint of this order block, that is where I'll be closing that position.
Order submitted.
I will close this if it closes red. There's no reason for it to turn back on me at this point. And it didn't move as quickly as I wanted. That closed red. It closed above though. Ah. I'll let this play out. Take my emotions out of it. Let the trade play out. Stops at break even now. There is take profit, number 1. I'm going to hold it. Actually, I'm going to sell 1 because of how that closed. Oh, I thought I closed 1.
Order submitted.
It did not give me that close of 1. I thought I closed it. So stops at break even. We'll see how this trades. This plays out. So that gave us 10 handles. We took profit, and then the second one stopped out at break even. This is not a market. I'm glad it worked out. Yes, Tony, it is. What do I push to make it float on the chart? You're talking about the trade panel? This is a TradingView feature. So I'm on a paper account. I'll show you. Up on the top left, you'll see right there are my buy and sell buttons. There's the buy, there's the sell. So if I click buy, actually I'm going to click sell. If I click sell, then I can hit this plus button on the right of my screen, and I can select stop, and then it floats right there, and I can drag it up and down to where I want it. So if I don't want my stop loss to go, if I want my stop loss to be there, then I can put that. I can push that plus again, and I can move my limit where I want to set my target, and I can put it right there. And so now I have my stop loss and a limit order set. Does that answer your question, Diane? All right, so that inversion played out. It worked. It gave us 10 handles. I sold 1 at target and held the other one to break even. The other panel. When I'm reducing size. So see how it says modify order? A screen will pop up like that. And then I just change my size. So it reduces the size for my stop loss. You click it, and I can change it like that. All right, so it's 10 a.m. I'm giving it 15 more minutes, but I'm not liking the way price is looking. For how hard that inversion played there, I'm not willing to take anything else. Sorry, let me get out of this. I don't want to confuse people. Apparently, I just found that my account, my copier failed and didn't exit that trade. I just saw that. Son of a gun. All right, let's see what the next 10 minutes shows us. I bet you we haven't even gotten a close above this. Yeah. Thanks, guys, for sharing the areas of your trading that you want to see improvement in. I think that's, what's amazing is all of it. I did not see anybody mention understanding the market, understanding their strategy better, understanding the market better. And I think that is not, I think that's, how am I trying to say this? I think everybody's feedback on the areas that they want to see improvement on are what most traders deal with. Are the areas that if they can master, the strategy is simple. The strategy could be, the 1, 2, 3 strategy, the peanut butter and jelly model. I mean, it literally could be almost anything, but managing your risk, managing yourself is the area that most people struggle with by far, and large. By and large, that's the biggest issue. And it's the area that I have to put discipline in every single day. I mean, we talk about it every day. All right, so low resistance liquidity right here. We just don't see an entry for a position. And I'm not convinced it wants to go that way yet either. Maybe it does. I honestly, with the price action we've seen, I really don't care what it wants to do. I just know that I don't want to be a part of it. Let me hide. Adzi, how you doing, my friend? Choppy. The market has been choppy. We took one loss and one break-even trade today. How's it going for you, my friend? Equal lows here. I feel you. I've reduced my size. That is one area that I just have learned to do. You just have to reduce your size to protect your positions and keep reading order flow, keep taking your model in light of how you may feel. Yes, there was. I'm grateful for everybody that's here. All right, so look at this right here. We just ran into a breaker. High, low, higher, high, body-wise. I'm looking at the bodies. High, low, higher, high. And we came into this body, or this candle right here. This is 11 a.m. Let's see if it wants to find resistance there. I'm not taking this. This is me reading order flow. We had displacement. Nice displacement lower. We see it on the 5-minute here as well. Decent displacement. We got these equal lows here. That's a great entry, to be honest. If we weren't in this environment, this would be a great entry. Equal lows right here. Breaker right here. Standard 10 handle stop loss. Targets there for 10 handles. And if it gets here, it's probably going to go to here. So 18 handles. Let's see if that plays out. I'm not taking it because I'm not happy with the environment. We do. I will say I probably need to increase this a little bit higher to allow it to come up into this fair value gap. So I have this sitting at the high of the fair value gap. First target is going to be these lows, these equal lows sitting right here. Let's see if it wants to hit those. This is not bad simply because we ran liquidity here and we're inside a fair value gap that has shown a lot of resistance and we stayed in the discount portion of it. Discount portion of that. We'll see if it wants to continue. Again, I'm not in this trade. because I'm not happy with the environment that we've been seeing. All right, so that failed on that one. Again, hence why we're not in this environment. We're in a nasty trading environment. I'm not liking it at all. So I refuse to take any trades here. And it is 10:15, folks. It's 10:15. Excuse me, 11:15. The market has been nasty, and we're outside of the macro time already. So we're gonna pause there for the day. I'm working on I have some videos that I'm trying to get out that I want to, in regards to the trading model, in regards to this environment, in regards to also previous day lows and previous day highs. Josh Welp is right. That is right. Take these days as getting off the charts and choosing to do more studying. Study the model, study to read order flow. Take the time off the charts to improve your skill set. And honestly, by you stepping off the market, by you walking away, you are improving your trading. Because look at this environment. Look at that. Look at these wicks. Yes, yeah, I get it. It's gone up. But look how it got there, my friends. Oh my gosh. Look at this. These wicks. Guys, I'm telling you. Let me show you an example. You've all seen it. I'm not even there. It was yesterday's pre-market was amazing. See here? Or right here. Look at this. I saw this. I took a trade here. I took a long and got a win out of it. But look at this. Look how clean this is compared to what we've been seeing. Do you see giant wicks? Do you see choppy up and down? No. This is the... Guys, I'm speaking for myself because I have such a long ways to go in my own trading journey. But you see these equal highs here. Beautiful equal highs. You see a low high, lower low. We're making nice order flow here. And then you have an inversion right here. You have an inversion entry right here that you could take to these highs. But look how it looks all before that. Now, if it's consolidating like this, that's fine. But once it starts displacing and you see how smooth and clean it looks, not very many wicks compared to this, it's a no-brainer on which is the better option. Here's an inversion that worked out. We have a bullish inversion fair value gap that worked out right there. This candle's close ran to this high. And guess when that happened? It happened after displacement lower, after it ran sell side liquidity. And then it ran these highs again. And what is it not doing? It's not expanding. Wick 1. Wick 2, and then retracing. These are seek and destroy conditions. Breakout traders are getting absolutely destroyed in these conditions. Breakout traders are in drawdown, guaranteed. Now, I do like this. These equal lows that we have here. But you would need to see displacement here to be able to get that. The problem with taking something like this is 50-50. Are we bullish? Are we bearish? Everything's saying bullish, but we're also really high in premium compared to where we started. So taking a short for a retracement is not a bad idea. But we're in an environment that just has not been very predictable. And I don't want to take unpredictable trades. I need to find a model for this type of environment. Yeah, but here's the thing. I think that does come in time. But I think it comes after profitability. I think it comes after profitability. Now this looks nice. If I didn't see all this before, I would take this. If it closes, but I'm not taking it. Seeing a nice wick like this and close above like that tells me higher prices. Now I'd be looking at this inversion right here to see if it wants to run this high. Why am I going back and forth? Because it's 50-50 on if it's a buy, if it's going up or down, if it's bullish or bearish. We're just in this consolidation that makes everything very questionable, and I don't want to be in an environment where I feel like it could go this way, it could go this way. I've taken trades like that before, but they're way more obvious than what they are right now. So take that for what it's worth, folks. It's just I'm going to be logging off, and I'm not going to get back on. I am not going to trade in this. Now, if 230 comes around, 130 comes around, and the market's beaming up and down and looking nice, I might consider it, but I doubt it. So that's going to be it for today, folks. Thanks for being here. I'm really, really glad you guys are here. Glad we were able to hang out today. Thanks for saying hi. Thanks for sharing your guys' areas that you want to see improvement in your trading. I think those are all fantastic areas, and make that your priority. Forget the profits. Focus on these areas, and you'll see improvement. And that's what I do. That's how I'm focusing. To me, when I reduce my size to smaller size, it's because it's not necessarily about the money. The money will come. So thanks for being here, guys. God bless you. We will see you tomorrow. Take care.